Good morning. It's now the 27th of May and I am going to do a quick market review so that I can kind of get my head in the game for today and for the remainder of the week. As you know, yesterday was a public holiday. I didn't even look at the charts yesterday because I was told don't look at the charts because it's a holiday, Memorial Day, etc. Although the markets were still trading, you weren't expecting much volatility, but in hindsight, I can see it was actually a really good day. It was very clean. So I'm actually just gonna look back right now. I'm going to do a quick top-down analysis from, let's go from the month because we're at the end of the month really and truly. So let's just go from month to week, day, hourly, and then to where we are now. So I'm also going to take off some of this so that we don't see it for now. Oops, and this one. That's what I want to get rid of mainly. Okay, so here we are on the month, and as you can see, this was from the beginning of the year. So this was January, February, March, April, and May. May was quite clearly, oops, let's just make that bigger, put it in the middle. May was quite clearly open, low, close, high, a nice big up candle. We took out obviously the March, and here we have the yearly high in February there, which we're still reaching towards if we're heading up that way. As you can see, April we had that massive wick. This is a swing formation. This is your middle candle, 1, 2, 3. So we are continuing in a bullish trend. Obviously, and this is the thing, at the higher time frame, we're looking at a bullish trend, but it's not going to be bullish every single day, right? You're going to have some down days and up days, but you just got to also remember in your mind that we are looking for bullish. We've closed above this candle, and we're heading up here. One of the things that I've seen ICT do is when you have a long wick like this, to look at its to split it into quadrants to see where we're going. Let's see, we're just short of 50% or consequent encroachment, which is interesting. So I believe we still got a little bit more way to go, whether that happens this month or into the next month up there. And I believe, and as you can see, this is a legacy gap, probably from a previous, maybe some kind of gap here, which is still open, and as you can see, it's right on the 25% on that upper quadrant. So yeah, there's a few things to consider. Okay, so this is where we are at the moment. We are, the candle, we've only got a couple of more days left. It could go lower, it could go a bit higher, but all in all, it's obviously an up candle, and we've completed this swing formation. So going into June, I would be anticipating open, low, close, high in my mind. Let me just drop down to the week. So here we have the week. Here we've got a weekly fair value gap, which also lines up with this gap here. And as you can see, we've got a nice V. Is this a market maker buy model, original consolidation, drop? We took out the low here, retrace, and go straight back up. So yeah, so I am thinking that we are going to go there maybe in June. Okay, so this is where we are on the week. So this is this week. We've opened low here, and we're rising up, so we've still got to reach for this candle. So we've got the previous week high and the previous week low, and we're right in the middle of it at the moment. Yeah, we haven't taken either side of the previous week's candle. It could be an inside week. Who knows? Time will see it. Tell. So let's go down onto the day then. What happened yesterday? Yesterday was an up day. Again, we got a swing formation, moving on up higher. And although, you know, this is that weekly fair value gap that I mentioned, I still see this gap down here. You know, they may well get filled in weeks to come, you know. So sometimes it's worth having these things open. And there we go. That's what that blue mark was. That was a daily fair value gap in the middle of that wick, in the upper quadrant of that wick. So this could be, I believe this is probably our draw on liquidity for maybe for the remainder of this week. We've got that swing formation there. And so this is where we are headed. Okay, let's just drop down to the hourly. Now this is what was interesting to me. So on the hourly, what we can see here, on Friday we had this massive drop down. And then Sunday we had Monday we had this new week opening gap established here. And then we shot up on Memorial Day, Sunday evening. We had this big rise up. We closed above this hourly CB here, dropped below it, and we've risen up again. You know, when we're looking at this range here, I mean, this to me looks like we've taken out this low. We've got a CB, we've got a busy. This is a market structure shift. So but we still need to balance this price range, don't we? So we should really come back down to here to balance it. I don't know when that's going to happen. I thought that would have happened yesterday or this morning, but as you can see, we saw price turn around after midnight, head straight up to this was the old new week opening gap. And if you notice, I can't remember why I put that white mark in there. I believe there was some kind of imbalance maybe in that new week opening gap, which is clear has been significant. It's just above consequent encroachment, and you could notice how the wicks are not, I mean the bodies are not closing above that, and we've got that rejection. Let me just, I'm going to see what that is because I don't know, I can't remember. So let's go back on this new week opening gap. What day was it? I've lost it already. This is one of the things I hate, is scrolling. Let's find it. We've got to go back a whole week, right? Tuesday. Here we go. You see? That was the breaker. So high, low, higher, high. So that was the breaker candle at 9:48. That's interesting in itself. I don't know what caused me to do it, but I did. I highlighted it. I think at the time it was because when I missed this entire move up, because I was waiting for price to return here. I was waiting for price to return here, and it didn't happen. And that has remained on here. So, and this is why it's important to keep notes. You notice it returned here when? Wow, at bang on 9:48 on Tuesday, May the 20th. That was 9:48 on Monday, the day before. So exactly the same time. You've got SMT, you've got a reaction, you've got a nice breaker block right on that level, and then price continued up higher, well, for a short period of time anyway. Interesting, but you've got the reaction exactly the same time the next day. Obviously it does pass through it here and back through it. Again, you've got another unicorn model right here, straight through. So this is why sometimes it's good to keep these things on, because again, it's a clearly significant reference point for the algorithm. Okay, so let's just get back to where we were today. So where are we? It's now 8:15. Let me just go back to my hourly candle. To see what we're expecting. So I think if we get support from this hourly BC here, then I anticipate that we continue up higher. If we break below this hourly BC come 9:30, 10 o'clock, then we could be looking to go lower. And the reason why I say that is because whilst we've got this move here, we took out this low here, high, low, high, low, higher, high, high, low, high, high, and this is our breaker here. We've actually now seen the same in the opposite direction. So we've taken out this high, we've got a low inside this busy, inside this gap. So if we get another low through here, then we could see, as I say, lower prices again. Bear in mind, we still got that, we still got, oh, there's a gap there too, which I can see. I think that's something that I highlighted from before on the 1 minute, which isn't necessary right now. But essentially, this is where I'm at the minute. But I am right now what the candles are telling me, because we're also in this gap here. Yeah, it's too early to say. I have to wait till 9:30 to see what 9:30 does, if it manipulates or not. Let's just have a quick look at the calendar, see what time the news is today, because that should also give us a good indication as to what we can anticipate to happen. Today is the 27th. We're at 9. There isn't anything just yet. We've got 10 a.m. and then yeah, and 10. So you might have your manipulation at 9:30, 10 a.m. distribution. But I'm just going to be monitoring this gap here to see what happens come 9:30. So yeah, that's it really for today. I think when it gets to the beginning of the month, I will strip back all of these lines. I need to be a little bit more organized and only have one color for BISIs and one color for SIBIs and one color for new week opening gaps, for example, so I know exactly what it is when I get dropped down to the lower time frames. You know, and as I say, like, you know, knowing that this is a 1 hour fair value gap or 1 hour busy, yeah, knowing if it's a 1 hour or a 1 day or a 15-minute would also help. And maybe that's what I will start to do into the coming weeks, to see if that helps me a little bit more. But overall, it's if we drop below here, then we're hopefully heading down further. If we reject in here, anywhere in here, I notice that we've got a gap over this portion here. Look at this low, then, and that low is right in the middle of this BC, then we could continue on higher. But I'm also very conscious of this. That could just be, you know, building up buy side liquidity, because so far we've got 2 long wicks from 7, 8. So we'll wait and see what happens at 9 o'clock. All right, and I will be recording from then on in, from 9:30.